Well, hi folks, it's Stratman here from pipware.com. We've been mainly concentrating on entries where we're trading with the trend. They are by far the very best trading opportunities you'll get. Unfortunately for some people, you don't have the luxury of being able to sit in front of the charts and wait all day for one of those trading opportunities to present itself. There were a few in the last session which were good. Now, like this one here, or this one here, or this one here, or this one here, but you kind of had to be there to be able to get those opportunities. So what you need in your bag of tricks, so to speak, is a way of being able to profit kind of any time of the day, which means sometimes you're going to have to trade against the trend. I don't recommend this for anyone that's really risk averse, but I'll give you the ideas of how you accomplish this thing of trading against the trend. So let's get started. Most of you know that I like the 60 period moving averages. Got that kind of idea from the 3 duck strategy off Forex Factory. Although I don't use the 3 duck strategy, I like the idea of the SMA 60 on different time frames. So the idea was to view a 60 period SMA on the H1, the M15 and the M5. So what I've done here is constructed a template that gives just that. Now, so this I'm on the M15 right now, so this is the equivalent of an H1 SMA 60. This is the equivalent of an M5 SMA 60, so this is a 20 period and that's a 240 period. And then down here I've got the 60 period on their own time frames. So in essence we get to view the 60 period straight out on each of these M1 through to H1. Very helpful. At the same time we've got our stochastics showing up just immediately below these charts, so we can see what's happening on each time frame. And we've also got our THV tricks, which you can kind of view as a bit of a mini MACD in a sense. They're just triple smoothed moving averages instead of the normal EMA. So where do we go from here once we've got this kind of thing laid out? Well, the best opportunities are trading with the trend, yes, but to trade against the trend, what you really need is you need some space, some distance between current price action and a point where price will likely hesitate. Now we know the points where price hesitates quite often, and that is at the previous daily high and low and the pivot point, the weekly high and low and its pivot point, the monthly high and low and its pivot point, and the yearly high and low and its pivot point. We also know that we can do hand-drawn support and resistance on the chart, and those will be hesitation points as well. So what we need is distance between where we are now and any one of those points to trade counter trend. Now also, as well as that, you'll find that moving averages, the SMA 60 particularly, is very good as being a point of hesitation or support and resistance as well. You can see here price on the H1 came down and tested this before it broke through. We've got a similar thing happening here on the M5. Price has come up to the moving average, hesitated on it before and kind of glued to it really. And then on the M1 as well, we can see that clearly coming up and now riding along the M1 SMA 60. So if we use the SMA 60 as pretty much a good point of support and resistance that we're going to head for, then all we need to know is that we've got a bit of space between where we're going. Which what I'm meaning is space between, if I'm going to trade towards this moving average, which is not typical for us, we trade away from the moving averages to go with the trend, I need enough distance here before I'm going to see kind of like a hesitation when it hits that point, as I see here. You know, it's come up, hit this point, hesitated. Okay, same here, it's broken through, it's kind of done a little bit of a hesitation there, broken through, come back, and now it's kind of hesitated again or consolidated. So to get an idea of what that is, what we want to do is, let's say we're thinking of a counter trend trade here. what we need to know is where is price with respect to our moving averages. Well, at the moment price is above this moving average and it's above this moving average. So if I do a long trade right now, I'm trading away from my moving averages here, but if I look at my M15 and my H1, I'm going to be trading towards my moving averages. So the most important thing for me at the moment is to know what the distance from price action right now to this point where I'm expecting price to kind of consolidate or get caught up. And on here, I don't need to worry about the M5 so much because it's going to be a trade away from this moving average. So what I've done on the dashboard is I've got this thing called the LCUMA, which means basically the lower, the current, and the upper moving average. So these are actually your distances. Now, I haven't really talked about this too much until now because I think this is the time to explain what that is all about. I think we're kind of ready to get into that. We'll get into the fractal one later as well. So for now, what you need to know is that this one on the left is the distance of price action on our lower time frame, which in this case is the M5. And this is the distance on the current time frame. In this case, we're on M15, and this is the distance to the on the higher time frame, which is the H1. So yeah, what I'm seeing here is that if I look here, I can see that on the M5 time frame, my moving average is 14 pips below where I am right now. I'm not too worried about that because I'm trading with the trend on that time frame. But if I look at my current time frame, which is this one, I'm 48 pips till I get to here. So certainly enough distance there to make a profit. I probably wouldn't be entering a trade if I was any closer than, say, 20 to 30 pips. It's up to you. You just practice with it. I think some people suggest 35 to 40 pips, but clearly with 48 pips distance from here to here, I've got plenty of room to profit before it's going to consolidate. And then if I go out to the H1 time frame and I look up here, I can see I've got 227 pips from here up to my moving average. So clearly a counter trend trade at the moment. If I think that price action is looking good on my M5 to go long, everywhere to go long, I know it's counter trend, I know it's a risk, but I know what my distances are. And as long as I've got a pretty good stop, nice tight stop underneath this, I'm likely to profit from this. Well, I should rephrase that, not profit from it. You're reducing your risk by having a tight stop, and you want to get a trading opportunity because you might only have a short period of time to trade. And as we can see, price might pull back down to here, and again we're expecting this is possibly a consolidation area. So as long as your stop is kind of below this area, you probably got a better chance, and same as here. So this is just an idea for you. It works for me. So counter trend trades, this is how I would approach them. In fact, this is exactly how I approach them. And but ideally, if I can get into one of those trades that's with the trend like this, pull back into the moving averages, go in with the fractals, that's what I really want to be doing. So hopefully this has been helpful for you. I'll post this template on the THV thread, and this is the one that I'm currently using for my trading. Love the SMA 60. The EMA 25 was really so that people could get a really good handle on how to do this trading, pulling back into the doing pullbacks against the trend, entering with the trend and going with it. But obviously that increased your trading opportunities by having a 25 period. I really want to be going over to the 60 period though, and trading that way. Okay, that's Stratman, and we will catch you later. Oh, just before we go, I have entered on this here based on this counter trend trade, and thought I'd show you how that's kind of panning out. So I entered back here, and currently I'm 15 pips in profit, so working out well for me. My stop is quite tight, as you can see, straight underneath here, and that's how we do it.